Hello friends, I'm Harry. The name stock market suggests a market for lines, but the big question is whether these lines are from the jungle or the circus. If a jungle lion appears in front of you, its roar can make your soul shiver and might even cause a heart attack. But the same lion, when it roars in the circus, even small children clap. This means that a lion is truly a lion only if it is plays freely. If it is made to perform tricks on command, it has no respect. In the stock market, do you follow someone's random tips without thinking? If yes, then watch today's video fully. After this, you will never need any guidance to invest in the stock market. Friends, let me explain the stock market to you very easily. In 2004, the stock market was at 6,000. Today in 2024, it has reached 72,000. This indicates how profitable the stock market can be. But from 2004 to now, in the last 20 years, the prices of many companies have dropped to zero, and this market has also sunk many people. So, there is a lot of risk in this jungle. But I have discovered something astonishing here from 2004 to 2024. One thing that hasn't changed is greed and fear. These emotions were present in the stock market 20 years ago and they are still present today. To stay safe in the stock market, the most important thing is to have accurate knowledge of this market. Therefore, in today's powerful video, I am going to share 9 precautions. Follow them, and I guarantee that no matter what happens in the world, you will never incur loss in the stock market. Point 1. Control your emotions. In this market, emotions are your biggest enemies, especially greed and fear. When the market rises, it feels like it will never fall, and we start buying heavily out of greed. And when the market falls, it feels like it will never rise again. So, we start selling out of fear and later regret our decisions. The market rises and falls on its own. The mistake is ours when we make decisions based on emotions. Remember, when emotions are high, intelligence is low, and you make wrong decisions and you later regret. Smart investors keep patience when the market falls. You need to do some. Emotions are your biggest enemy in this market. Learn to control them. Point 2. Diversify your investments. Never invest your all money in one sector or one company. Instead, invest in different sectors and companies so that if one sector performs poorly, your entire investment is not affected. By diversifying, if one sector goes down, your money in other sectors remains safe. Point 3. Avoid buying too many shares at once. Do not buy shares of many companies at once. When you have money, every company seems like a gold mine, but experienced investors buy shares of selected companies. It is better to buy more shares of fewer companies. For instance, if your budget is 5,000, buy shares of 2 or 3 companies. If the budget is 1 lakh, buy shares of 5 companies. This way you don't have to research many companies and can focus on a few. Point 4. Be clear about your goals before investing. Don't invest based on news or tips from others. Be clear about what percentage of return you want from the market. If you are clear, you won't fall for small temptations and waste your money. The stock market is not get rich quick scheme. Point 5. Trust the market for the long term. Treat the stock market like a test match, not a T20. It might happen that as soon as you invest, the market crashes and the prices of your shares start falling. Do not worry. There are two ways to deal with this risk. Set up a loss and invest only the extra money that you don't need immediately. Point 6. Invest regularly. Make a habit of investing some amount every month. This doesn't mean you have to buy shares every month. Set aside money and invest when the market gives you the right opportunity. Keep adding oil to the lamp to keep it burning. Point 7. Stay away from rumors. Often You will hear rumors that a particular company's share will rise soon. Many times, these rumors are separated internationally by groups who already hold these shares. When the price rises due to the rumors, they sell their shares and make a profit. While innocent people get trapped, always verify such information before acting on it. Point 8. Buy shares of good and stable companies. Do not trust share of poor companies even if they are cheap. Middle class people have limited capital, so avoid taking big risks with small companies. Focus on stable companies with a good background and best performance. Point 9. Have a fixed goal for selling. When buying shares, decide in advance the target selling price. You can set different prices for selling shares of the same company at different stages. For example, if you bought 1000 shares of Tata Telecom at 50, you might decide to sell the first 200 shares at 55, the next 200 at 65, and so on. Remember to sell shares from time to time because you are in the market to make a profit. These were the 9 principles that can make you roar like a lion in the stock market. But before I end, don't forget to subscribe this channel. See you on next time.